right? 400 trillion. But quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Bitcoin. Usually when Bitcoin goes up, the whole cryptocurrency market begins to rise as well.
Now is not the time for fear. It is the time to be well-informed, diversified, and strategically positioned for the upcoming wealth transformation. That if these large financial institutions do not keep up pace with the changing technology environment, they risk falling behind. So as
how TradFi adopt blockchain, right, in that space, so we want to be part of it, so that we not left out in terms of the solutioning. Yeah.
Alrighty, what an intro right there. What is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be discussing and talking about the current state of the digital asset landscape, what recently took place via price action and the total cryptocurrency market cap. Show you guys how we have been discussing and tracking this for some time here on the CYPRX platforms. And then we're also going to jump into discussing and talking about this massive wealth transformation that we are on the cusp of experiencing over the next consecutive couple of years. We're going to be jumping into fundamentals. I'm going to be reading a document from Boston Consulting Group. I'm just showing you all some updated information that is to be the case, and that is exactly what's happening over the next consecutive couple of months. And really just digging into showing you all that bank and financial institutions are 110% coming to this space. So hopefully you guys enjoyed today's video breakdown. Sit back, relax. We're going to be listening and playing some video clips. I'm also going to be reading through some fundamentals. But before we get into that side of things, let's discuss and talk about the total cryptocurrency market cap and where we're at, right? Myself and the research team here at CYPRX, we've been tracking this information for some time openly on the YouTube, giving you guys updates, not only in the form of price action, but also accurate fundamentals. The most recent update that we gave to you guys, you can see here on the X space. I said to you guys just a couple of days ago when the market was all fearful and we saw some liquidations in the digital asset space as some profit taking unfolded. As we ended October, we got the Coinbase earnings report on Wednesday. I believe it was the 30th of October, which came out slightly downbeat. That created some profit taking and a risk off environment in the digital asset landscape. We pulled back. And I told you guys during that market pullback on November 3rd, it was a Sunday when I posted this, the recent market correction, along with any future fluctuations before hundreds of institutional investors arrive, should be viewed as an opportunity. Retail investors have a once-in-a-lifetime opportunity that has never been available to us to front-run these financial institutions. Now is not the time for fear. It is the time to be well-informed, diversified, and strategically positioned for the upcoming wealth transformation. Just to show you guys that we've been talking about this, and when I actually posted this to you guys in the charts, because that is important. When you're following influencers or any individuals that do market analysis on the internet, you want to be able to pinpoint where they're saying these things at. You can see, looking at the total cryptocurrency market cap, November 3rd was, again, during the bottom of that pullback that we experienced as we transitioned from October to November. And that is where I put this post out to you guys, telling you all that any pullback or fluctuation to the downside in this digital asset landscape should be seen as an opportunity. Not financial advice. Again, that's just how I'm personally seeing things, considering the broader market landscape and how bullish this whole entire digital asset landscape is behind the scenes. Okay, the stuff that the mainstream doesn't talk about, the developments that have been unfolding, the partnerships, the networking, the connections, the proof of concepts that have come into fruition. There's so much momentum, including the developments in the regulatory environment, that have not been priced into this digital asset landscape yet. Okay, so I just wanted to show you guys that here at CYPRX, we actually call out market bottoms. We actually put out good information and keep you guys forward looking. However, I do want to get into the future landscape and what could potentially unfold and what things we are paying attention to that could create a risk-off market environment or dampen risk sentiment, because I don't want people to get too overly optimistic that there are still some things in the near future that could unfold that could weigh on the digital asset landscape, giving us, again, better buying opportunities. But before we get into that, so that way you guys understand, over on the CYPRX YouTube, if you're new here, we have been covering this information. I just want to show you guys physical proof. So this is a video clip from one of our video breakdowns before. I'm actually going to start putting these together in playlists for you all on the CYPRX YouTube. I'll label it like market updated analysis or something like that. But we have consistently and accurately talked about XLR price action and XRP price action. For example, in this video breakdown just a couple of days ago, we were telling everybody that we were buying dollar cost averaging into XRP at 49 cents, which is now currently trading at 53 cents. And we were telling everybody that we were dollar cost averaging into XLR at 64 cents when it was trading at 62 to 64 cents. And it's now trading well above 72 cents. Okay. And again, we disclosed that and explained all that in this particular video breakdown. And we have been tracking the price action accurately. No, insane indicators, none of those magic Fibonacci sequence price predictions, none of that stuff, just accurate fundamentals and institutionalized deltas. And hopefully if you guys have been following along, you're seeing how accurate they are. So yet again, we utilize the institutional deltas to call out this most recent market bottom or this nice pump in price action. Here is a video of us doing that in this live video breakdown that we had just a couple days ago. Just take a second and listen. So right now, if the market sentiment continues to remain risk off, there is still room to the downside where we could correct down into 62%, which would put us at about $2.1 trillion. 79% would put us a little slightly below $2.1 trillion. And a full 100% correction will put us back down into $2 trillion, which in my personal opinion, as long as we do not break below and close bearish below $2 trillion, this uptrend still remains intact. Right. So I just wanted you guys to see the technical analysis has remained accurate, because if we head over to the charts, we can see, again, taking a fib from the low of October to the high of October, utilizing the Fibonacci properly and not making outrageous price predictions like all these bullish moon boys on the internet do. You can see that the market corrected down to that 62% threshold, which we mentioned to you guys in the previous video breakdown. At the same exact time, at a bottom, I posted this out. You should remain optimistic in the digital asset landscape. And in that video breakdown, I mentioned that I firmly believe that this uptrend is going to remain intact. And you can see now we have created another leg higher, surpassing October's previous monthly high. Right? So again, just proving you guys accuracy. I'm not trying to toot my own horn and say, I told you so. That is not what CYPRX is here for. CYPRX is here as a platform to show you guys that we have accurate fundamental and technical analysis on a consistent basis, week after week after week. So with that being said, considering that right now the current market environment is risk on, I want to bring to your attention some things that we here at CYPRX are paying attention to that could create a risk off market environment, considering that we are not buying up digital assets anymore now that the market is pumped. Here at CYPRX, we only buy in times of fear, uncertainty, and doubt, when the market is as at a low, or when trillions of dollars or billions of dollars are being liquidated from stock and crypto markets. That's when we buy. So right now we are comfortably sitting on our hands in profit in some of the positions that we were just most recently taking during the last most recent market downturn, which only lasted a couple of days. All right. So what are we paying attention to moving forward? I'm just going to read some snippets of the private CYPRX report. For those of you all that actually track fundamentals, we know that tomorrow, Thursday, we have some major central bank decisions on the forefront to be paying attention to, both from the Bank of England and the Federal Reserve, as they prepare to release their monetary policy announcement. Okay, so that obviously, of course, could create some headwinds depending on the tone that is delivered from central bank speakers, because as of right now, both central banks are expected to usher in another 25 basis point cut. Now, if that does change, for example, if the Fed decided to hold rates tomorrow, that would obviously, of course, impact the digital asset space, most likely negatively, as we would start to see pricing in of a higher interest rate environment. But however, I do not believe that that's the case. I think that both central banks tomorrow will cut rates to some degree. So we will be paying attention to the rhetoric from central bank speakers, whether they deliver a more hawkish or dovish tone. So that's one thing that could sway risk sentiment tomorrow. Another thing, over the next consecutive couple of weeks / months, maybe even heading into 2025, that we are paying attention to, that created a risk off sentiment in the past, especially at the end of July, rolling into August, that we still need to be mindful of, is on the forefront of potentially negatively affecting the digital asset landscape temporarily. Again, emphasizing the temporarily part, because if we do see another market correction or a market downturn, again, long-term bullish on crypto. Any short-term fluctuations that create opportunities to the downside, the discount price, need to be seen, again, from my personal opinion, not financial advice, as an opportunity. Okay. And that is the yen carry trade unwinding. So the yen carry trade strategy, where investors borrow in low yield currencies like the yen to invest in higher yielding assets, could reverse if the Bank of Japan raises interest rates, potentially starting as early as January. And unwinding of this trade would lead to higher yen demand and could pressure risk assets like crypto. Now, to what degree? Again, I don't have a crystal ball, but it's just something I wanted to bring to everybody's attention, not to get too overly optimistic, as these risk factors still are in play in the digital asset landscape. I'm still optimistic, but again, just bringing you guys short-term volatility and things that could unfold that could create more opportunity for us as retail investors to buy at further discounted prices if it does happen. Another thing that we are paying attention to here at CYPRX that could weigh on risk sentiment is, of course, the geopolitical landscape. Specifically, tensions right now in the Middle East seem to be the primary factor negatively affecting risk assets when anything unfolds in the Middle East. So right now, heightened conflict in the Middle East, such as potential escalations between Israel and Iran, still present risk-off threats, which could increase demand for safe haven assets like gold or the US dollar or the Japanese yen, and pull capital out of risk assets like crypto, again, temporarily. If we see any of these factors unfold or hit the digital asset landscape, where we see a risk off market mood and we see another pullback or massive liquidations in the crypto space, we here at CYPRX will be looking at taking advantage of discounted prices. All right. So just because I'm telling you guys that these things could potentially unfold and weigh on the current risk on sentiment, right, hindering further price action appreciation of the crypto space, does not mean that I'm a bear or that I'm saying that these things are going to come into fruition. It's just things moving forward that we are paying attention to position ourselves accordingly if they do come into fruition. All right. So I wanted to cover that real fast. Moving on, let's get into the fundamental side of things, showing you guys that we are about to experience a massive wealth transformation over the next consecutive couple of months / years, really showing you all fundamental information that the mainstream is never going to cover for you guys. All right, so we're going to start here with this Cointelegraph report. As you guys know, President Trump secured the victory today, which is absolutely phenomenal. I feel like we can all, at least people with logical thinking, can breathe a sigh of relief. Let's continue. Republican Senate majority signals more pro-crypto Congress. Okay. The Republican Party has secured majority control of the United States Senate, offering a promising outlook for the cryptocurrency regulations in the world's largest economy, which is super bullish as we head into 2025, because we know, lack of regulatory clarity has hindered institutional adoption. So seeing some more green lights in the regulatory environment, obviously, of course, is going to allow institutions to flood in at an unprecedented pace. It paves the way, it says here, for harmonized crypto regulations that will drive innovation, boost competition, and incentivize talent to return. The U.S. crypto industry worked for years to make this happen, and I eagerly await seeing the deliverables implemented. This to me, again, over the course of the next consecutive couple of years, based off of the information that I'm going to share with you guys moving forward in today's call, is extremely optimistic for this space, which is why, again, any short-term price fluctuations to the downside that we could experience in the short term, in the near term, right, in my personal opinion, need to be seen as an opportunity, because this digital asset landscape for the crypto assets that do survive whatever purge we experience, if there even is one, it's going to be exponential over the next consecutive couple of years as we live through this massive wealth transformation. So moving on, I'm just going to start to go down the rabbit hole with some of the fundamentals that I have to share with you guys today. So the first one being this one here. All right. And this is a post that I made where an individual representative with lots of valid credentials. I'm not going to get into his credentials because I went into that in a previous video breakdown. So to save time, we can see here, I said, it's not researchers telling you this anymore. This is from Steve Vallis. He is the managing director at Blockchain APAC and regulatory committee member on the Canadian Blockchain Consortium. And on his LinkedIn profile, he posted a he posted a snapshot of him talking on stage. You can see it's from October 17th, 2024. So this is recent. The headline here reads, Institutional Guardians Evolving Custody Solutions for Digital Asset Adoption. And in his post in LinkedIn, let me get out of this real quick. On his post in LinkedIn, I don't know why this is so, there we go. I had it too zoomed in. He says right here, the banks are coming inch by inch, working through organizational workflow and partnership challenges. The technology is not the issue. So an individual in the regulatory landscape mentioned that the banks are coming. This goes hand in hand with something that was just posted via Chainlink, where two individuals on stage talk about adopting these new technologies and how they must change or they risk falling behind. And this is something that we've attempted to get people to fixate their attention on that are naysayers in the crypto ecosystem or the blockchain ecosystem or just Web3 in general, is that if these large financial institutions do not keep up pace with the changing technology environment, they risk falling behind. So as a retail investor, as a normal person, what do you think is going to happen to you as an individual that does not adopt these technologies? Just like every other major industrial revolution that has taken place before this one, the fourth industrial revolution, the people that did not adapt, the people that did not start businesses, adapt to new technologies, learn new skills, right? In this case, it will be digital skills, incorporating AI, blockchain, Web3, digital identities, carbon credits, all these new technologies that are unfolding at such a rapid pace. If you do not know what they are, how to leverage them to your benefit, you will fall behind just like these financial institutions. And that is a fact, 110%. So why I'm reiterating this information to you guys, showing you all the people in the regulatory environment are telling you guys banks are coming. Now I'm going to show you guys banks on stage telling you all that they are going to adopt these technologies or risk falling behind. It should spark a light bulb in your head that goes, wow, maybe I should stop being a naysayer and get actively involved in growing and building my portfolio and my wealth now before the financial institutions that are interested in adopting these technologies come into this space. I mean, right now, just looking at the total cryptocurrency market cap sitting at $2 trillion, anybody with a brain sees that as an opportunity, knowing how much of traditional finance is still sidelined, waiting to come into this space. I mean, I don't see how people don't see it. So just take a second here and listen. I'm going to play two clips back to back of two different representatives talking about this. You know, if they do not adapt scenario, they will fall behind. They both say it in two different ways, but just listen to what they talk about here.
Do you see in the evolution of your roles as individual organizations and crucial financial market infrastructures as part of your adoption of decentralized type blockchain-based assets and workflows? So I'll start that question with Jorgen, if you don't mind.
So, you know, we are an incumbent. And as I mentioned, we have been around for almost 60 years. And there are a lot of things that are changing. But if we try to focus a little bit on what will not change in the future, that might be a solid foundation to actually build on. And there are a few things that, you know, have happened in the past, will continue to happen in the future, and that makes our role quite critical is, first of all, the trust people put in our institution. And, you know, somehow blockchain was created at the beginning to disrupt trust, and we are the physical representation of that trust. We represent that trust not only with the assets that we have, with what we bring to the market, and how we support the overall growth. So we recognize as well that the role we are playing today is not going to be the role we're going to play in 5 to 10 years. So we have to change, and we have to transform from inside, but we have to as well appreciate the fact that we are part of an ecosystem. And if the ecosystem doesn't move together, then you might be far ahead, but alone, or far behind, which would be the worst situation. So
you heard him just say that if they do not adapt and change, right, they may be far behind, which would be the worst situation, right? So he's literally acknowledging to the people, and this was posted 1 day ago on Chainlink's YouTube. They're acknowledging to the general public, anybody can go and watch this, that these financial institutions need to change. This is not CYPRX telling you guys that banks are coming. This is the banks. This is literally an individual representative from a large financial institution on stage telling you guys that they are changing. They're changing their core banking infrastructure. They're adapting to these new technologies. The lady asked him about blockchain, and you heard it directly from the horse's mouth. So here is another video clip of another individual representative saying similar to the almost exact same thing about if they don't adapt, they will fall behind. Take a second here and listen.
Agora doing the same thing with cross-border payments. I think these serve to give what I call conviction to the markets that regulators are behind it, the technology works. These are being deployed in real-world cases, right? So in terms of market participants like us, we kind of look at these projects and pilots as something that we want to participate in as well, because we want to be actively involved in reshaping market structure, giving solutions that fit what the market wants, especially in how TradFis adopt blockchain, right, in that space. So we want to be part of it, so that we not left out in terms of the solutioning. Yeah.
So you have another representative on stage, and you can see now this is actually a really good picture. You got Ko-Ki Chong. He's from Asia Next. Georgian, I'm not going to butcher this gentleman's name. He's from Euroclear. We got an individual from Chainlink, and we have another individual from SBI Digital Markets. So literally all financial institutions sitting on stage. That gentleman just said that they want to be a part of shaping this new financial market infrastructure, and that they don't want to get left behind. Okay. So I just wanted you guys to hear it from financial institutions instead of me. It's sounding like it's my opinion that financial institutions are coming. It's not my opinion. It is a fact. And if you ignore that fact, again, as a retail investor that has a massive opportunity to front run all of these banks, because they're not here yet. Some of them are, give or take, right? They're in ETFs and Bitcoin and Ethereum and so on and so forth. But the large percentage of traditional financial money and capital and liquidity is not here yet. And I mean, that is 110% apparent. And it's going to unfold at a rapid pace as we head into this massive wealth transformation. So now let's transition. Let's talk and discuss about this wealth transformation. I posted this for you guys back on October 26, 2024. It was a post from UBS on their LinkedIn profile where they said, again, coming from another financial institution, with nearly $84 trillion in wealth transfer underway over the next 2 decades, families wonder how best to prepare the rising generations. And this goes hand in hand with something that Smoke posted on his X profile. Shout out to Smoke if you guys don't follow him. He's a phenomenal researcher. He posted same thing, general concept. This is, I'm assuming, a PDF screenshot of them talking about the coming wealth transfer. I don't know if you guys can see that fine print, so I won't bother you in reading it. But it talks about the coming wealth transfer. It talks about how baby boomers in this generation was the wealthiest in history, and how all of that money is about to come over to Gen X and millennials, and how we have a massive opportunity, just like we did back in the dot-com bubble and so on and so forth, in the now. They're comparing the rise of the digital asset landscape and crypto to the early days of the internet. So, I mean, this is, again, something that's so massive to be able to live through. And it's so mind-blowing that people are neglecting to study this space and enlighten themselves on what's happening, just because price action hasn't significantly appreciated in altcoins across the board over the past 3 years. And that's because we've seen massive headwinds weigh on the digital asset landscape significantly. All of that over the next, I'd say, maybe year to year and a half max is going to be well behind us. And we are going to see, I mean, inflows of liquidity that we've never seen before into this digital asset landscape. And again, my personal opinion. So you need to prepare and position yourself accordingly. Again, not financial advice. So that leads me over to, now that we're on the topic of wealth transformation, let's get into an actual organization with valid credentials. So this was posted from Zonix, or hopefully I'm pronouncing that correctly, on their LinkedIn profile. And it talks about a PDF from Boston Consulting Group that they just put out, where it says tokenized fund asset under management could exceed 600 billion by 2030. We're going to read through this report because, long story short, in this report, outside of discussing and talking about a timeline, which is when this wealth transformation is going to unfold over the next consecutive couple of months / years, it talks about DeFi, it talks about public-private blockchains, it talks about institutions offering these new technologies to their clients. And so my goal here today is to show you guys that this information is not, again, coming from us as an opinion. It's coming from these large organizations, and this is all stuff that the mainstream is never going to cover. The mainstream is going to continue to pump fear, uncertainty, and doubt into your minds to shake you out. And that is not the direction you want to go, right? Another direction you don't want to go is believing all these bullish moonboy hopium addicts that constantly pump massive dopamine into your brain by giving you guys these outrageous price predictions, telling you all that it's going to happen and materialize overnight, when in reality, there are still some things that we have to get through before we see this massive price appreciation. And I went over some of those things, in today's video breakdown. Those are things that we need to overcome to really truly see a massive risk on environment, and for us to see huge price appreciation in the digital asset landscape outside of regulatory clarity. Okay, so this goes on to read, Zonix is at the forefront of this advancement, enabling financial institutions and asset managers to unlock liquidity and enhance compliance across tokenized funds. With Zonix Dynamic Interoperability Security Token, DSIST, that's what it's called, protocol, institutions can seamlessly tokenize real-world assets and integrate with global DeFi systems. Now, something that myself and Mr. Aqua in creating the Wealth 28 Club has capitalized on trying to enlighten you all with is that these large institutions are coming to DeFi. They're going to be able to take and utilize their digital assets to earn yield, especially considering that we are headed into a low interest rate environment where multiple central banks across the board have started to cut rates. We actually talk about this in our most recent report, right? One of the main reasons why we've seen bullish conditions in the digital asset landscape is because central banks all across the world have started to cut rates, right? It says right here, central bank policies easing. One of the reasons why we're seeing a risk-on sentiment in crypto is because global easing cycles have continued through October, with central banks in New Zealand, Canada, and the ECB all implementing rate cuts. This environment supports higher demand for risk assets, as lower interest rates typically decrease the appeal of holding cash, driving capital into higher yielding and speculative assets like crypto. Well, we know, based off of what I just told you guys, moving forward into tomorrow, guess what? The ECB and the Bank of England and the Federal Reserve are both projected to also usher in rate cuts tomorrow yet again. So we, over the next consecutive couple of quarters, are going to head into a low interest rate environment. Most likely, it's going to take some time. It's not going to happen overnight. But when that unfolds, again, the appeal for cash is going to go down, and the search for yield is going to continue to increase, along with regulatory clarity and all of the infrastructure developments that have been built over the past 3 years to allow financial institutions to onboard into the DeFi ecosystem. We're going to see billions of dollars come into not only crypto, but also into DeFi, scaling DeFi solutions to unprecedented levels that we've never even seen before. And if you go look at the total value locked in the DeFi ecosystem right now, it's like 80, maybe $90 billion. Okay. It's projected to be 600 billion by 2030. Take that into consideration when myself or Mr. Aqua tries to enlighten you guys on learning how to get your digital assets working for you, because these financial institutions will 110% be offering those solutions to their institutional clients. Okay, and I'm going to prove that to you guys in today's report. So this is the report that we're going to read. It says right here, just a little snapshot to get you guys to stick around for this, because there's some really juicy information in this report. It says, as we approach a critical inflection point, this is again from Boston Consulting Group, and we'll go over who they are in a second for those of you who don't know, over the next 12 to 18 months. So there's a time horizon, right? That time horizon puts us at the end of 2025, rolling into 2026. Okay, so keep that in mind. I'm not giving you guys any overnight projections. It's not going to happen tomorrow. It's going to take time. For those of us who are patient, for those of us who understand the macro dynamics at play, and for those of us who are very confident in our long-term investments, we're the ones that are going to benefit significantly from this. Not the bullish moon boys who get emotionally driven when prices don't appreciate in value rapidly overnight because they plug their little tiny $1,000 investment into the market and they lose hope. Okay. This is for the people that are long-term investors, that are really serious about the space, that actually understand the technology and understand the opportunity in depth of what's about to unfold. All right, that's who's going to want to stick around to read this document with me, because this document is so massive. Now, as we read through this document, because I'm going to read through some snippets on this PDF, I'm going to be playing some video clips that go hand in hand with what the document is saying, via some video clips from some large financial institutions and systemically important organizations that I've found that, again, have barely any views. So not only am I going to be reading a document that supports the wealth transformation and that banks are coming, but I'm also going to be playing video clips from different organizations, large organizations, confirming the same exact thing. So this just is more evident proof that what I'm attempting to show you guys is unfolding, significantly. So let's stop sharing that screen real quick. Let's go over to my other tab and let's jump into that fundamental piece. If you guys are enjoying this breakdown so far, I ask that you do me a favor. If you're watching this as a recording, smash that thumbs up button and subscribe to the YouTube. We do appreciate the love and the support. Always trying to show you guys the realest information and keeping it just 100 with you guys, ahead of the retail crowd, delivering accurate fundamentals, accurate technical analysis, and good, sound, consistent research. Okay. If you guys are watching this live right now and you have come into CYPRX for the first time, or maybe you randomly just jumped on this live, do me a favor, follow me on X, consistent, good, valid information and research. And we're always just trying to give you guys non-biased and non-opinionated information, sticking to real good research from large organizations like the Boston Consulting Group. So real fast, the Boston Consulting Group, for those of you all, excuse me, who are unfamiliar with who they are, give me just 1 second. Where'd that tab go? So the Boston Consulting Group, real fast, they are a global management consulting firm that has been a pioneer in the field of business strategy since its founding back in 1963. They have a massive history with managing large financial institutions, businesses, organizations, and they steer them through groundbreaking concepts, especially during this digital transformation. They lead them to making important, very good decisions. Okay. So again, they're one of the major consulting firms, like EY is a major consulting firm, Deloitte, major consulting firm, so on and so forth. So back to the fundamental piece. Let's read through this document. So here it is right here. This is the document. It's labeled tokenized funds. It was just put out in October 2024. So you guys can see that it is updated and it is recent. So all this information is very relevant and still fresh. Okay. And we're just going to go through and we're going to read some of this, and just excuse me while I transition from slide to slide, because we're going to read some of this and then we're going to play some video clips. Okay. So it's going to get a little bit messy here. But just the forward right off the bat, the forward drops some massive gems. This gentleman right here is the managing director and senior partner at the Boston Consulting Group, Sean Park. And he says here, tokenized funds are not only highly scalable thanks to their replicable structure, but also serve as a catalyst for the broader tokenization of the financial ecosystem. By enabling near instant transactions and unlocking liquidity and reducing operational friction, this innovation could generate about US $100 billion in addition in annual returns for investors, while creating new revenue streams for financial institutions. So this offers a profitable business model, which is what financial institutions need to see if they're going to adopt new technology. So I highlighted that. It says, we encourage industry leaders to engage with insights in this report and explore how collaboration and innovation strategic action can drive sustainable growth. Now is the time to embrace this transformation and lead the next chapter in financial services. This kind of reminded me of that post that I put out to you guys during the most recent market downturn, telling you guys that now's the time to remain educated, well diversified, and strategically positioned to take advantage of this wealth transformation. You're now hearing the same exact vocabulary terminology from a senior directing manager at the Boston Consulting Group. Okay. Now, this gentleman here, he's the co-founder of Aptos Labs. After more than 1 decade of development, blockchain tech is finally ready for large-scale and sophisticated financial use cases. Private blockchains are concepts of the past, and adequate use of public blockchain technology is the key to unlocking the future of open finance. Now, that right there, public blockchains are concepts of the past, and adequate use of public blockchain tech is the key to unlocking the future of open finance, is such a monumental statement, because so many people have been so fearful that these financial institutions were going to adopt private blockchains instead of public blockchains. But now we're seeing that landscape significantly change right before our very eyes. So I'm going to play some video clips that are going to coexist with what this gentleman from Aptos just said, showing you guys that these public blockchains are actually the ones that these financial institutions are more interested in adopting, and they know that that is what's really going to scale this entire ecosystem. So just take a second here and listen to, I'm going to play 2 video clips back to back. Let's go over here. Like I said, give me a second as I transition through all these slides. I have like 100 tabs open. Okay, so this is an individual representative from Signum. He is the CEO of Global Digital Assets Bank, Signum, and he talks about how financial institutions are actually now transitioning to considering adopting public blockchains. And then I'm going to play a video clip of an individual gentleman from EY, the global blockchain leader at EY, which is again another major consulting firm, saying the same exact thing, that private blockchains were never really going to work. Financial institutions are now realizing that, and so they're going to start to adopt public blockchains after running successful proof of concepts and after regulatory clarity, of course, comes into fruition. And again, massive price predictions are coming from these large financial institutions and these reputable organizations, which I'll also play a video clip of. So just take a second here and listen to these individuals talk about this in scale.
Blockchains, which a few years ago always ended up being, well, we can just work with private permission networks, so we control everything. And now I think public blockchains are really winning. People more and more realize, hey, this is just makes sense. It's more secure. It's ultimately the only way to scale, and that is a big win, I would say, for also how these institutions are thinking about it and how regulators are creating the frameworks that allow to operate with these blockchains. And then, last but not least, when it comes to tokenization, we now see real assets moving on chain with the biggest institutions, BlackRock, Fidelity, private markets. We worked with Hamilton Lane, one of the largest private market sector players. They are now creating products, new asset classes, share classes to have on-chain access to their products. They quite frankly also see it as a business model and business case, because they see more and more assets on chain and more clients.
Remember, I just told you guys that they see this as a valid business model to earn profits from. I just said that to you guys. I know it did. But long story short, you heard him say that these financial institutions are seeing that public blockchains make more sense to adopt, right? That's how this whole entire infrastructure, that's how this ecosystem is going to really scale. Moving on, we have this individual gentleman from EY, Paul Brody, okay? Now, before I play this video clip of Paul Brody confirming the same thing that the Signum representative just confirmed, and the same thing that the Boston Consulting Group paper is confirmed, that public blockchains are going to be the ones that these financial institutions want to adopt. Do you guys remember this video clip of Paul Brody from 6 months ago only has 473 views, talking about the institutional liquidity wall that is being held back via regulations, to full circle back to this report, right, that I just read and started off with you guys, that the Republican Party secured the majority control of the Senate, and how, again, regulatory clarity seems to be a lot more optimistic moving forward now that this has taken place. It says right here, this paves the way for harmonized crypto regulations that will drive innovation, boost competition, and incentivize talent to return. The goal of this video is to show you that this is happening. It's happening. Like, buckle up your seatbelts. This is going to be so crazy to live through. Back to Paul Brody. Listen to what he says here about how trillions of dollars are going to come into crypto. He specifically says crypto, okay, once regulatory clarity comes into play. Take a second here and listen to what he says.
They're unleashing a huge amount of constructive investment activity. Is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco, right? 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Right. So that's coming from Paul Brody. He is the global blockchain leader at EY. That's not coming from CYPRX. That's coming from a freaking representative from one of the largest consulting firms telling you guys that trillions of dollars are going to come into crypto. Now, I will admit, he did say that not all of that money is going to come into crypto, but he did confirm that a very large portion of it is going to flood into crypto. And he just talked about $183 trillion in bank deposits, $109 trillion in stocks, bonds, $133 trillion, and over $300 trillion in real estate. Come on now, people. To assume that the digital asset landscape is not going to at least reach 10, 20, $50 trillion is illogical thinking, right? I mean, that's very doable, in my personal opinion, over the next consecutive couple of years. It's not going to happen overnight, right? We're not going to wake up tomorrow and see a $50 trillion market cap, but over the next consecutive couple of years, I'm trying to show you all that this is going to be the case. It's happening at a rapid pace, and I'm physically showing you guys examples of large institutions and people with much more credentials than myself tell you guys that this is happening. Okay, this is not bullish moonboy hopium. This is called research. This is called how you actually participate in the next fourth industrial revolution by having a long-term strategical vision. Okay, moving on back to the public blockchain narrative. This is Paul Brody, again, the same gentleman saying the same thing, just to confirm back to the Boston Consulting Group document where the gentleman mentioned, how institutions are finally waking up and they're realizing that none of this is going to survive on private blockchains. However, they are going to exist to some extent in the future. To really get this to scale, they're going to need to utilize and incorporate public blockchains. And that's what's going to really allow this industry to scale monumentally. So just take a second here and listen.
Right, 2017, I remember everybody was talking about enterprise adoption, right? It was around the corner, it was coming. You had lots of enterprises starting to sponsor crypto conferences, right? You started to see banners. You say, wow, Web2's here. And it really hasn't happened, right? Like you said, and it's been sort of frustrating. It's been fascinating to watch. I feel like I've talked to a lot of crypto companies. I feel like there's a variety of reasons, but let's dig into that. Like, what's going for enterprise adoption and what still needs to happen for you to see that mass adoption?
So the overwhelming number one obstacle around enterprise adoption is privacy. So at the end of the day, I mean, my favorite example is like every business agreement boils down to this. I've got money, you have stuff, and we're going to exchange my money for your stuff under the terms of an agreement. Well, it turns out, we can represent the money and the stuff as digital tokens, right? That's fantastic. And smart contracts are amazing in terms of automating the routine work of business agreements. The problem is, until basically, I would say, end of last year, or even just a couple months ago, we didn't really have any ways to do this under privacy. And, the money for stuff under an agreement, that's among the most sensitive things that a company can manage, right? So, to give you an example, right, everybody knows that, Samsung, for example, buys memory chips, or they buy, say, CPUs from other companies, or they buy displays from other companies to put them in their phones sometimes. Well, how many displays they buy, what they pay for them, that is really, really sensitive business information that they don't want to disclose to anybody. And at first, people say, oh, that's no problem. I'll put my stuff on a private blockchain. But that actually doesn't work for a couple of reasons. First of all, private blockchains don't actually have any privacy in them. This is kind of one of the things that people took a while to grasp. But it turns out that you can create this walled garden of your private blockchain, and you can basically prevent people who are not in your sort of ecosystem from joining, but everybody who is in your ecosystem can see all the other transactions in a private blockchain, which means that you can't invite, say, two different suppliers in because they can see what you're paying each other and how you're splitting your orders. So private blockchains don't provide privacy. And even worse, private blockchains don't provide the value proposition of decentralization. So number one problem, privacy. Private blockchains don't solve that problem. Right? Only really encryption, zero knowledge encryption is the only way to solve that problem. And I would say until a few months ago, there was nothing that would work at an enterprise scale. I'm very proud of the work that we have done at EY to get us there. But the other thing was you couldn't even do private smart contracts. And again, now.
Right. So long story short, it's the video probably goes on about another 2 minutes. And he just talks about how private blockchains aren't going to work. They're not going to work because they have too many, inefficiencies, and how public blockchains are the solution to that. However, because of the bear market cycle and because of everybody's mentality surrounding crypto and digital assets, people ignored public blockchains as the solution. And now financial institutions are starting to wake up to this. And you can see that reflected in other major financial institutions like the CEO of Signum saying that, Paul Brody from EY saying that, Paul Brody making a prediction that trillions of dollars over the next consecutive couple of years, once regulatory clarity is clear, are going to flood into crypto. And again, to revert back to the Boston Consulting Group document, which we'll go back to and continue reading, they said the same exact thing. So I'm just attempting to show you guys that this is not my opinion. I'm just gathering research and information to show you all that this is happening. It's going to take time. They're going to utilize these public blockchains, and we're seeing this unfold at such a rapid pace. Now, to continue this document from Boston Consulting Group, it says, as DLT use cases proliferate, banks are ramping up initiatives aimed at enhancing efficiency in markets from cross-border payments to fixed income. This reflects a pattern of growing investor demand, particularly from virtual asset owners, i.e. holders of crypto, such as crypto foundations, and that over the coming period, we expect demand to continue to rise, especially when regulated on-chain money, such as regulated stablecoins, tokenized deposits, and central bank digital currencies projects materialize. So again, this is just Boston Consulting Group confirming that even if we do see some short-term price fluctuations to the downside, the trajectory for this digital asset landscape is up, okay? So that's why I'm very confident in saying that any downturn in the market, short term, that we experience, in my personal opinion, should be seen as an opportunity to accumulate more blue chip digital assets that are really developing, helping build out this infrastructure to onboard large financial institutions and progressing, especially in the state of the cryptocurrency market that we lived through over the past 3 years since the bear market started in 2021. Now, to continue to really emphasize and hopefully get you guys to want to further your education in this space and fixate your attention on DeFi. Remember, I talked about how these financial institutions are going to want to offer these digital asset solutions and investments and DeFi to their clients. Okay. Now, we've heard reputable individuals on stage confirm this, which I'll play for you all in just 1 second. We've had an individual large financial institution representative from HSBC confirm on stage that institutions are going to want to offer DeFi to their clients. Myself and Mr. Aqua, who unfortunately is not on the call today, hopefully he's listening in maybe, but we created the Wealth 28 Club, which is an in-depth course university that teaches you all about DeFi from A to Z, how we are exposing thousands of dollars of our own personal capital in the DeFi ecosystem in the form of digital assets to generate yield. And that, remember how I talked about, if you've been on this call since the beginning, the search for yield is only going to continue to increase as we head into a lower interest rate environment, which I also prove for you guys. That is going to incentivize these financial institutions to adopt DeFi, because the DeFi yield compared to traditional financial yield is going to continue to increase as we head into a low interest rate environment and as digital adoption continues to unfold. Your goal right now, in my personal opinion, again, not financial advice, should be to learn about DeFi. These digital assets, they're not called digital liabilities, they're called digital assets, should be making you money. No matter if it's XRP that you hold, XLM, HBAR, Link, Algo, XLR, whatever, most of these digital assets, if they don't already have a DeFi ecosystem, are in the process of building out a very sound DeFi infrastructure for you to be able to go and take your digital asset and earn yield on it, whether that's through liquid staking, whether that's through being a liquidity provider, whether that's through lending, borrowing, so on and so forth. You should be learning how to grow your wealth in the now by utilizing your digital assets, and then being able to take that information and that education after the next bull market cycle. And instead of selling your digital asset that you work so hard to accumulate to operate efficiently in this new digital environment, you don't have to sell them for fiat. I can't imagine somebody that actually becomes a multimillionaire after this next bull market cycle that sells all their hard-earned digital assets for fiat. Makes absolutely no sense. You're going to sell your digital assets that could continuously earn you yield for the rest of your lifetime in DeFi back for traditional fiat currency that has been depreciating at a rapid pace as central banks print more and more money that continues to devalue over our lifetime and literally will be worth probably nothing in the next 10 to 20 years if we continue down this rabbit hole of unprecedented liquidity printing, so on and so. I mean, I don't have to go down that rabbit hole. If you are a logical and you're a logical thinker and you understand the financial system and what it really is, you will not want to sell your digital assets. For example, it doesn't matter if XRP is 50 cents or $50. A 50-cent XRP and a $50 XRP can be used in the same exact way. And again, if you don't know how you can utilize your XRP to earn you yield, then you don't really truly know the asset that you hold. How many times do you see these people on Twitter and on YouTube say, know what you hold, know what you hold. Oh, when XRP reaches $1,000, I'm going to sell it. What sense does that make when you could take your $1,000 XRP, if it's ever worth $1,000 in the future, and you could borrow against it? You can lend it. You can freaking deploy it into liquidity pools. Hopefully we get some one-sided liquidity pools on the XRPL, especially with this EVM sidechain development. And you can earn fees for providing liquidity on the XRPL. Why would you want to sell your XRP for fiat? Makes no sense. Again, learn DeFi. If you don't know what I'm talking about, and all this is like, what is he talking about? You can earn yield on your digital assets? Yes, you can. Pretty much every single digital asset out there right now in some way, shape, or form, you can earn yield on. Okay. If you're not earning yield on your digital assets and you just have a bag of digital assets sitting in cold storage, you literally went from the traditional system over into this new financial system, taking all the old bad habits of traditional finance into this new digital realm. That's not advancing. That's not adapting. That is not migrating and learning new digital skills. You're just bringing all the old crap from the traditional system over to this new one. And this new one was built in such a way for you to be your own bank. I hope everybody understands that this new decentralized infrastructure that we are headed into was built in such a way for you to be your own bank, for you to be able to take your digital assets, for you to be able to leverage them in DeFi and to earn yield. Okay. And you have that opportunity. And I'm going to physically show you guys that they're talking about this as well. Who is they? Those people in control, Boston Consulting Group, these large organizations, these institutions, they are going to be offering these solutions to their clients. So here it says, in the global cryptocurrency market valued at approximately 2.5 trillion some odd dollars, I don't think it's 2.5 right now, it's like 2.4. We estimate there is about 290 billion of investment demand for tokenized funds. The segment includes owners of stablecoins, tokenized real-world assets, and DeFi protocols, and continues to grow rapidly. DeFi protocols, excluding stablecoins, are even larger, with the market cap of about $120 billion and two-year average growth rate of 56%. The tokenized real-world asset market is reaching a market cap of about 12 billion. Tokenized funds, on-chain pooled investments, can effectively meet investment demands by addressing the gap in on-chain offerings, which are currently dominating by DeFi protocols, by leveraging proven investment strategies that asset managers have applied to manage trillions in assets over the past few decades. The funds offer a more robust investment option. Additionally, they provide access to real-world investment opportunities, allowing for better portfolio diversification amid shifting market dynamics. So right here it says, virtual asset owners are seeking yield-generating investments, right? So this goes hand in hand with the video clip that I played for you guys. Let's go back to the presentation of individual representatives from HSBC saying that they are going to offer DeFi to their clients. People, you got to wake up. If you don't know about DeFi, you really have to understand this new environment in which crypto is not just about buying and hodling and experiencing massive price appreciation, becoming a millionaire, selling your digital assets that you worked hard to accumulate for fiat currency and just think you're going to make it. The goal should be how to grow your wealth in the now and then how to keep your wealth after the next bull market cycle and not have to transition back into traditional finance. You want to learn how to keep your digital wealth, right? So listen here. This is Sergey from Chainlink talking about how financial institutions are going to offer DeFi solutions to their clients. And then I'm going to play a video clip of the HSBC representative on stage saying that they are also going to offer DeFi to their clients. Take a second here and listen.
Inventory and financial products, that will naturally create a growing market. That's what we're starting to see, and which the asset management industry has kind of really in earnest kind of shot the gun in the air and started the race because of the adoption they're seeing. Interestingly enough, they're seeing that adoption in large part from the public blockchain community. So I think you will see the institutional TradFi community view DeFi and the public blockchain community as a big, valuable customer base. And then I think what you're also going to see in the coming year is more and more of the TradFi community's users wanting access to DeFi yields and DeFi systems. And the TradFi folks will be in a position where they have to think of ways to provide that access.
Right. So you guys heard it directly from the horse's mouth. I'm not making this up. I'm not trying to go out and incentivize you guys to get involved in DeFi. It's not going to benefit me if you guys get involved in DeFi. It'll only benefit you. It'll only allow you to learn how to get digital assets working for you. It'll only allow you to grow your wealth in the now, to prepare for this massive wealth transformation, accumulating more digital assets now before the financial institutions come on board. Okay. Now here's another video clip, just so that way you guys don't think I'm randomly making this up and finding, you know, just there's so many clips out there for you guys to access that nobody's watching that talk to you all about this. So here, this is the gentleman, Benjamin Kodroff, or Kodroff. Hopefully I'm pronouncing his name correctly. He is an individual rep from HSBC. Okay. Listen to what he says when Sergey, it's a very quick 15-second video clip when Sergey asks him, are you going to offer DeFi to your clients? Listen.
But do you see TradFi becoming a user of DeFi at some point?
Absolutely. We're already using the smart contract capability for many of our tokenized real-world assets. HSBC has announced here in Hong Kong tokenized bonds. We're also doing tokenized gold. We've also made announcements that we're going to be providing institutional custody. And increasingly, we're going to need to make that work in many, many different regions. These are DeFi primitives that have started in that community, but we can also theoretically, with regulation, make that even work on other ledgers, public permissionless ledgers being a potential option.
So to full circle everything that I'm attempting to show you, he not only confirmed that they're going to offer DeFi to their clients, but he also said that most likely scenarios that public permission blockchains are going to be something that they utilize in the future. Okay. Back to, and this is the last little tiny spiel I'll give to you guys before I head off for today. Hopefully you all have enjoyed this presentation so far. Again, I'm just in an attempt as an enlightener, as a relayer of information, as an educator, to really show you guys what's happening right now. So many people are sleeping on this opportunity because they watch these bullish moon boys that throw up Fibonacci price predictions that manipulate people into thinking that this is going to happen overnight. And in reality, your goal should not be so, unless you're a day trader, right? And you intraday scalp these markets like some of us do here at CYPRX for quick profits. Your goal on digital assets like XRP or Link or HBAR, any of these ones that offer real world utility and value, should not be to earn on them tomorrow overnight. Like thinking that XRP is going to go to $50 tomorrow randomly is just so illogical. And it's most likely your belief if you do believe that because you've been following the wrong people. $50 XRP, again, I'm not throwing a price prediction out there. We're just talking hypothetically, is possible over the long run once regulations come into play, once all the headwinds that we could experience in the short term are behind us, once these financial institutions onboard into DeFi and actually start utilizing these public blockchains, then yes, it's a reality. So what are you going to do in the now to grow your wealth, to earn more XRP, to accumulate more? And I'm just using XRP as an example. There's so many out there that you could utilize to grow more wealth, right? What are you going to do now to grow that wealth, to expand your bags now? Even if it's $10 a day that you're earning in DeFi, that $10 a day could turn into 5 XRP per day that you're stacking every single day. Boom, just automatically through DeFi yields that you're earning. Okay. Instead of taking your hard-earned capital and deploying it into the space, use the market's money. Use the market's money, and you can do that through DeFi. Again, we teach about that in the Wealth 28 Club. If you guys are interested in that, by the way, head over to CYPRXtrading.com. We'd love to have you on the team. Wealth 28 Club, so much valuable information, literally hundreds of video breakdowns in detail, talking and discussing about DeFi. Last but not least, okay, this is again back to the Boston Consulting Group document. It says, as we approach a critical inflection point over the next 12 to 18 months, so there's that prediction for you guys, wealth and asset managers must act swiftly to seize the opportunity. While early movers already achieved some success, the establishment of regulatory guidelines, global standards, and technological enablers will be critical, to create a solid foundation for a frictionless, global, interconnected industry. So there you guys have it. Give or take roughly about 12 to 18 months left to really get your act together, to really pick up the slack. If all you've been doing is buying and hodling, ask yourself why. It's because you've been following people that have manipulated you most likely into believing that that's the only strategy to success. It's time to think beyond that. We are in an age of information, an age of enlightenment, a digital revolution, okay? Your goal, even if you don't want to touch your long-term bags, should be to at least figure out how to, when those long-term bags really lift off and skyrocket, how to keep that wealth, not sell it all back into the traditional financial system. And if that's your plan and you want to sell your crypto for fiat, then by all means. I'll look back at in 2040 and ask all those people, where are you at now, right? Imagine we do experience another bull market cycle. Let's just hypothetically speak and talk into the future. Let's say 2027, we see a bull market peak. Again, I'm not saying that's when it's going to happen. Let's just be hypothetical here. 2027 bull market peak. You make $5 million in crypto. Boom, you sell it all for fiat. You sell it all for fiat and you go try some business endeavor, right? You go do whatever, try to make some business happen. Okay, hopefully you guys become successful. And then you have somebody that makes 5 million the next bull market cycle and puts a very large portion of that, let's say $1 million, in a DeFi pool that's earning 20% or 30% APY consistently. Who do you think the next market cycle or over the course of time is going to have more money? The person that deploys their capital in the DeFi ecosystem is, not the person that just sells for fiat and does nothing. Okay. Don't be that person that thinks that selling for fiat is your only option. Go out there, look into DeFi, look into digital real estate, look into tokenization, look into learning how to trade. Right now, it's the time for you to accumulate a digital skill. As we transition into this digital environment, how can you create and consistently generate digital wealth? That should be your goal. And again, DeFi is one of those many ways in which you can achieve that. So with that being said, many blessings to you guys. My goal here today was to show you all that we still have some headwinds in the crypto market, give or take this most recent price appreciation that we've seen ahead of us that we need to be mindful of. Not saying those things are going to come into fruition or not, but it's just something that we need to be paying attention to in case we get more discounted opportunities. Any discounted opportunities in the near future that we could experience, again, in my personal opinion, need to be seen as an opportunity. Not financial advice. That's what I'm going to be personally doing. After having shown you guys this information, I made it clear that a wealth transformation is well underway. That did not come from me. That came from large organizations like I showed you in today's video breakdown, like Signum, UBS, so on and so forth. Okay. I also showed you guys that banks are 110% coming. Not only are they coming, but they're interested in providing DeFi solutions to their institutional clients. So you, as a retail investor, instead of just sitting sidelined, accumulating assets, putting them in your cold storage and just waiting, how can you remain active? How can you progress in the environment now, scaling your wealth, laying a foundation for you to really thrive this next bull market cycle? I showed you guys how one of those ways in today's video breakdown is through the utilization of DeFi, taking your digital assets and actually earning on them. If you want to learn how to do that, how we are doing that here at CYPRX, actively in the market right now, then head over to CYPRXtrading.com. Come and join our team. We'd love to have you. At the end of the day, if you enjoyed this content, do me a favor, smash that thumbs up button and subscribe if you're not already. And with that being said, my spiel is over, and I will see you all in the next live and in the next video breakdown. Everybody take it easy and have a blessed rest of your week.